So welcome back to another Edgewonk trading journal review. This is a trading journal that was sent in by one of our users, and I'm going to take a look through the journal, help the trader make sense of his data, and maybe give him a path forward with his trading based on what we're going to see in this video. If you're an Edgewonk user and you want us to take a look at your journal in one of the next reviews, if your journal qualifies for a review, you will see this button here at the top. You click it, follow the link, you enter your review request, and then we might be able to review your journal in one of the next videos. So in this journal, we have 71 trades. It's a very active day trader. You can see in some weeks he's taking 10 trades, 31 trades, 23 trades, and on average he's taking 14 trades per week, 3.5 trades per day. So this must be a short-term day trader, maybe even a scalper. What we see is that he is in a drawdown, minus 5,000 US dollar, minus 5% on the dot. His win rate is fairly low, but this doesn't have to be an issue if your reward to risk ratio is large enough. But as we can see here, the average P&L on his winning trades is just barely larger than his average losing trade. So this is something that the trader should improve, and then his equity graph is going to look different. But we're probably going to find more things in this journal that could help this trader move forward with more clarity and with a better plan and with more confidence. So first, let's go to the chart lab and let's look at the trade management. And here we can see our first big finding. What we see here is that the green line, as you can see, it's called potential performance, is above the blue line, which is the actual trading performance that the trader is realizing. When we hover over here the last data point, the actual performance is 8.56, whereas the potential performance is 15.87. And this means that the trader potentially could have made almost twice as much by not managing the trades. So the green line is based on a set and forget trading approach. So where you enter your trade, you set your stop, your target, and then you let the price play out and the trade play out. And very often we have seen this in previous reviews, right? Where the trader is actively managing the trade, which typically means cutting losses too late, or in most cases, not letting winners run long enough, always closing winners ahead of the take profit. And this trader, by following his trading plan that he had when he entered the trade, he would have been able to significantly improve the performance. And this can often make the difference between a losing trader, break-even trader, or maybe even becoming a profitable trader. So this is the biggest finding and should give the trader a lot of confidence in going forward, that he should be able to follow his trading rules and trust his trading system more. Moving on, let's go to the exit analysis graph. And the first thing that jumps out is that he has a lot of large red bars and very often just very tiny green bars on his trades. And this means that when he's getting into a trade, the trades are failing very quickly. So he's getting into a trade, he has just a very small move in his favor, and then the price turns and goes to his stop loss. So this really stands out here. So what we're going to do with this information now, let's go and filter only for winning trades. And this is super interesting, because now we see that those trades, only his winning trades, actually often don't have a lot of red bars. Of course, there are here 4, 5, 6 trades where the price moved all the way towards the stop loss. But on the other hand, he also has a lot of trades, the majority of the trades on his winners, where the price doesn't move a lot against him. So a winning trade doesn't move against this trader a lot and usually goes in his favor by a significant margin. Another thing that we can see is that he is often not closing the trades at the optimal point. So the white markers in those bars represent the actual trade exit. So this bar, here, those as well, he is closing the trade at a break-even point and well beyond below the take profit. Although the price, as we can see here indicated by the large green bars, would have reached the take profit, which is indicated here by this horizontal green line. This is something that we already saw in the trade management graph, which showed us that the trader is often mismanaging the trades. But now we actually see the reason. And we see that the trader is often bailing out of his profitable trades too soon, and he's not letting price play out. So the trader should really have confidence in his trades and in his system. Another thing that we can keep in mind is that his winning trades don't have a lot of adverse movement against him, so the price doesn't move a lot towards his stop loss. In such cases, what you can sometimes experiment with and test, if you are moving your stop loss a little bit closer towards your entry price, what will happen is that you can potentially increase your reward to risk ratio, right? You keep your target the same, but your stop loss is moved slightly closer to the entry price. It will boost your reward to risk ratio, right? And in this case, it doesn't look like if we would move his stop loss maybe 20-30% closer towards the entry, it wouldn't change the dynamics. It wouldn't change the win rate of the system, because the winning trades wouldn't really turn into losses. This is something that you always have to keep in mind. When you're moving your stop loss a little bit closer, you have to analyze if previous winning trades would turn into losses when you have a price reaction against you and then the price turns into your favor. You want to make sure, obviously, that you don't turn too many wins into losses by moving your stop loss closer. This is probably not the case. Maybe on those two trades, if the trader would have moved the stop loss slightly closer, those could have turned into losses. But on the other hand, your reward to risk ratio on all the other trades would increase as well. So that might be something for the trader to test. Now let's take a look at his losing trades. And as I said a while earlier, his winners don't move towards his take profit a lot. So you see mostly red bars and very few and very small green bars. This means he's getting into a trade and the losses turn on him right away. So by moving the stop loss, also on the losses, this wouldn't change a lot because the losses would still be losses, but he would just get out a little bit sooner, boosting the reward to risk ratio on his winning trades. So that's actually something that the trader should test. Don't implement it right away in your live trading, but test it. That's what we have the alternative strategies for. When you go to the strategy lab, alternative strategies, that's where you can test those things. And this would be my big recommendation for the trader. And this could really make a difference. In the beginning, we said he should probably look into boosting his reward to risk ratio. And the exit analysis graph shows us that this is actually a viable option for this trader that he should investigate. Moving on to the setups, we see that the trader has a total of 7 setups here, which is quite a lot for an underperforming trader. Usually you recommend to specialize in the beginning and to narrow your focus. Don't spread yourself too thin by trading too many different setups. And 7 setups is quite a lot because you have to juggle all the different criteria, scanning processes, and all of the different rules. That can make trading very difficult. Also, it's usually introducing a lot of noise that is not really necessary. So when we look here at his setups, he has the scalping setup, which is most of his trades. He has mostly break even on the scalps, but this seems to be his #1 setup quantity-wise. What we can do is we open the filter, we look at scalping, and let's go to the equity graph. The equity graph doesn't look too bad actually. It's roughly break even, a small loss, right? Not too bad actually. When we now go to the trade management, we can actually see that there's a lot of room for improvement still, right? Actual performance for only the scalping trades is well below the potential performance, 8.7 versus 16.4. So by not mismanaging his trades, he would be able to improve his performance almost 100%, which would most likely turn him from a currently losing performance on his scalps to a probably slightly profitable approach. That would be my big recommendation here for this trader. Focusing on one setup is going to give you a lot more focus. It will also help you not to miss trades. And typically it will improve your trading quality because you're making better decisions and you're not distracted by everything else. So that is something that the trader should really think of in combination with everything else. And maybe for the next few weeks or months, ditch all of the other things and only focus on this one setup. But I really like the journal overall, very well maintained, good amount of sample size, and the findings that we got out of it are really good. So to recap, trade management needs to be dealt with. Exit analysis gives you some ideas on maybe approaching your stop approach differently or testing a different stop approach. That would definitely be an idea. Narrowing your focus here. And those three things will help the trader move forward. I'm very sure of that. We have seen very similar patterns in other journals, and I would be really interested to see how this trader is doing in a few weeks' time. And what we can do is maybe revisit the journal in another 2 to 3 weeks where he has taken another 30 or 40 trades. Maybe he has been implementing the changes and the suggestions that I've given him in this video, and then we can see how he's doing and maybe give him more tips going forward. So let me know what you think about this review, what you think about this journal. Again, if you want us to review your journal, click on the link if it appears in your journal. It means you qualify for a review, and I look forward to hearing from you.